Hey guys, this is Justin from breakintocre.com, and in today's video, we're going to talk about recourse versus non-recourse loans, what the differences are between the two, and which one is right for you at the end of the day. So if you're looking to do your first or next commercial real estate investment deal, and you want to make sure that you pick the right loan option for you, make sure to stick around for this video. So if you're looking to do your first or next commercial real estate deal, or you're looking to break into the commercial real estate industry for the first time, make sure to subscribe and hit that notification bell to be notified every time I release a new video. So when you buy a piece of commercial real estate and you put a loan on that piece of commercial real estate, oftentimes you're going to have the choice between whether or not you want to choose a recourse loan or a non-recourse loan. So by the end of this video, you'll know the differences between a non-recourse and recourse loan, and also what the pros and cons of each are. So let's start with the differences between these two first, because this is pretty simple. So on a recourse loan, the borrower is personally liable for any outstanding loan balance on that loan. So what this means is that the lender is actually able to go after personal assets in order to receive any sort of collateral that they weren't able to get from either the refinance or sale of the piece of commercial real estate that they decided to lend on. So for example, if a property sells for $5 million and the outstanding loan balance is $6 million, the lender can go after the personal assets of that borrower in order to recoup that full $6 million loan amount. Now on a non-recourse loan, the opposite is true. So in this case, the borrower is not personally liable for the outstanding loan balance on the deal, and the lender can't go after personal assets directly related to the borrower. So in that same example, if we sell a property for $5 million, but the outstanding loan balance is $6 million, that $5 million would go to the lender, but the lender wouldn't be able to go after personal assets to recoup that final $1 million. Now on a non-recourse loan, that doesn't mean that the borrower is never responsible for any sort of outstanding loan balance, and that's mainly due to clauses in the loan documents that are called bad boy carve-outs. And bad boy carve-outs essentially protect the lender in the case of things like fraud, bankruptcy, any sort of tax evasion, or any sort of illegal, unethical, or criminal act that may jeopardize the lender's ability to be paid back in full. Now, when you're looking to put a loan on your commercial real estate property, you're likely going to look at one of 4 different options. So you may talk to a commercial bank, you may talk to a life company, you may look at CMBS or commercial mortgage-backed securities options, or if you're financing a multifamily deal, a government-sponsored entity like Fannie Mae or Freddie Mac could be another place you would look for a commercial real estate loan. Now, as far as which types of lenders offer recourse versus non-recourse loans, about half of commercial real estate loans that are originated in the commercial real estate business are originated by commercial banks, and oftentimes commercial banks will issue recourse loans because they keep those loans on their balance sheet. Now, non-recourse loans are generally issued by life companies, CMBS lenders, and government-sponsored entities like Fannie Mae or Freddie Mac, which make up the other half of the commercial real estate lending market. Now, even though personal liability is a huge drawback on a recourse loan, oftentimes some big pros of recourse lending is that the lender is going to be able to be more flexible with terms. So while you might have a long lockout period or a major prepayment penalty when you're dealing with a CMBS lender or a government-sponsored entity, when you're going with a commercial bank on a recourse loan, oftentimes you can negotiate with them on key terms that are going to be essential for you to make sure that you're able to execute on your business plan that you promise to investors and partners. Now, if you're just starting out and you're looking for loan amounts lower than about $1 million, recourse debt may be your only option at that point. But once you start to move to loan amounts over $1 million, you can start to go to lenders like Fannie Mae and Freddie Mac, and great small balance loan options do exist that are non-recourse for loans above $1 million up to about $7.5 million. And the bigger the loan amount gets, oftentimes the more lenders are going to want to lend on that deal, and more non-recourse options become available to you. So at the end of the day, what you choose really comes down to your own personal preferences, the terms that you want to negotiate on that deal, and your own comfort level with risk on your commercial real estate deal. So the bottom line is, for non-recourse loans, you're not personally responsible as the borrower, but you're going to have less flexibility in your loan terms at the end of the day, while with recourse loans, you are personally responsible as the borrower, but you're going to have more flexibility in your loan terms and options. Now, if you want to learn more about how different loan terms are going to affect the cash flows of your commercial real estate deal, I definitely recommend checking out my free real estate financial modeling crash course, and you can grab that for free in the link in the description below. And if you've been watching this channel for a while and you want access to all of my courses on real estate financial modeling, real estate deal analysis, and how to actually advance your real estate investment career and do your first deal, definitely check out Break Into CRE Academy, and I'll also link that in the description below. So thanks so much for watching. If you like this video and want to see more content like this, make sure to hit that like button, subscribe to the channel, and share this with anyone else who might find this helpful. Thanks so much for watching, and I'll see you in the next video.